All right. Good morning, everybody, and happy Monday. Welcome to Monday Mortgage Live. I'm your host, Michael St.Claire, and I hope you guys are having a great start to your week. Had a warm weekend, if you will. Had some record lows here in Florida as far as winter goes. We are now entering that phase, so I hope you guys got to enjoy it, got to bundle up. And for those that got to enjoy some fires or open pits, I'm envious. I'm very envious. I'm going to let the room fill on up so everybody can have the opportunity to hear what's going on, and I'll be right back with you guys. Alrighty. Hope you guys can hear me. If you guys can't, please let me know. If you definitely can, please give me that like, that thumbs up. Let's dive right into it as far as interest rates, where interest rates are now this week and what we should anticipate. Last week we had some volatility for the better, if you will. Non-farm payrolls reports came out last week, and they came out less than expected as far as expectations on payrolls. That was great news. It did cause volatility for rates to start to improve. However, they did adjust numbers from November of 2016, which kind of offset and threw everybody for a loop, if you will, on Friday. So this morning, the bond market opened up in more favorable pricing, and so that volatility is still going on this week, and we should expect that. This Friday, we have retail sales reports, which is going to be a pretty big impact as far as where interest rates are going to be heading towards in the start of the new year. But for the most part, if you're looking into locking, enjoy this week because you're going to see some more favorable repricing on interest rates. And that's where we are with interest rates. I wanted to jump into as far as where loan limits are at. In the start of the new year, some loan limits have increased. Before, a maximum loan size for conforming a Fannie Mae loan was $417,000. Once you exceed $417,000, you went into jumbo products, also known as non-conforming programs. In 2017, they've increased that amount for conforming to $424,000, and FHA has even followed suit as far as increasing loan limits in certain counties. An example of that would be Orange County. Orange County here in Orlando has increased to $277,000 as a max loan amount for Orange County. So good news there. Definitely comes into play, especially if you're trying to leverage your down payments, because FHA does have a minimum down payment of 3.5%. So does it conforming at 3%, but truth be told, you won't see a 3% down payment on a 424 loan amount. We'll dive into that on another episode. But speaking of leveraging, I did want to give you guys some good information as far as how you can leverage your buying power as a first-time home buyer or a subsequent buyer, or maybe even you're an existing homeowner and looking to refinance. The best way to leverage your position, in my professional opinion, is always get your paperwork in on time. And by on time means once you've reviewed as far as your loan options and programs that are available to you, you've custom tailored the loan, if you will, as far as how it best suits you and your family, from monthly payment to cost estimations. Getting your paperwork in within 72 hours is going to help the financial institution, the loan originator, better prepare the file for underwriting. Because at the end of the day, a loan originator does not approve a loan. This is the job of an underwriter. The best that a loan originator and or a processor and or their team can do is prepare your file based on the information you provide on your application and documentation. So some of the big components, if you will, is income. That's a very, very big component as far as a loan process goes. And if you are considering using 2016 income in any way, shape, or form, you must have your W-2 and file this income with the IRS. You can provide your last pay stub to a loan originator to give you an idea as far as what your year-to-date income is going to be. It's going to be the same amount on your W-2. However, for an underwriter to consider that income, 2016 income, you must file your tax returns. If you guys have any questions in regards to that, always feel free to PM me or even leave your comments below. Even if you want to reach out to me and find out what kind of income an underwriter would be using, if you're a self-employed or if you're commission-based, if you receive overtime, if you're hourly, if you're salary. There's many different forms and ways of calculating income, so always feel free to reach out to me direct. This has been your Monday Mortgage Live for the week. I, again, am Michael St. Claire. Thank you so much for watching, and I'll see you guys next week.